I think we don't have many years until we reach full adoption. This is the time to make real money. We've got a bigger problem coming, which is the rise of AI and the robots, and beyond 2030 things start getting really screwy. So we've got a period now to maximize your P&L. So you have to become a mercenary to your P&L. Well, here's an asset or an asset class that's growing 100-200% a year. All you need to do is not lose your tokens. Banana Zone, everybody thinks that everything goes up together. It's not. 90% of the Banana Zone is you thinking, fuck, why don't I own that token? Why do I own this token? And you get FOMO and jealousy and greed. It's awful. But generally over time, they all ratchet up if you're in decent stuff. The reality is the meme coin casino in the right part of the cycle has much better odds than the casino.
Pal emphasizes the importance of adoption curves in evaluating digital assets. Viewing blockchain through the lens of technological adoption reveals exponential growth patterns. Developers, users, and activity levels are critical metrics to assess where projects stand on their adoption journeys. Pal argues that the sweet spot for investing lies in the second cycle of a project's life, where risks are mitigated but significant growth opportunities remain. Ethereum exemplified this during its last cycle, becoming a hub for DeFi and NFTs. In the current cycle, Pal points to projects like Solana, which have demonstrated resilience, strong developer activity, and growing ecosystems. He advocates for a methodical approach, identifying strong adoption metrics, observing relative outperformance against Bitcoin, and making asset allocation switches as the market evolves.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
And really all I look for is, okay, the thesis was first Bitcoin, okay, got that. Then ETH comes out, smart contracts. Took me a while to understand what the fuck that meant. And then I just started looking at adoption curves. This is a technology, it's all about adoption. And so I just start doing like log regression charts of these things and just look at the long term. And my thesis is tomorrow going to be more digital than today? Then keep going, right? Because this is the new infrastructure layer for a technological world. If we're going to live our lives more digitally, a simple thing is everything that's digitized goes to zero in cost and value over time. Everything, cloud storage, email, you name it. But then comes along blockchain and you create digital scarcity. So suddenly you can create value in this infinitely deflationary world. So I'm like, okay, this is a really big thing. So once you get to that point, you realize, okay, if this is the new infrastructure layer, it's not going to be one project that wins. And so once you've got your head around, it's okay to switch around assets, you're now looking for, okay, I think we don't have many years until we reach full adoption. This is the time to make real money. We've got a bigger problem coming, which is the rise of AI and the robots, and beyond 2030 things start getting really screwy. So we've got a period now to maximize your P&L. So you have to become a mercenary to your P&L. Now, we've already talked about, I don't know many rich traders. Very few. There's Paul Tudor Jones was good, Stan Druckenmiller is pretty good, but most short-term traders don't make a lot of money. The real money is to be Jeff Bezos or Elon Musk, is just to own your stock and don't sell it. If your company's growing at 50% a year, you become obscenely rich. Well, here's an asset or an asset class that's growing 100-200% a year. All you need to do is not lose your tokens. And then, so I just start looking at the relative charts. So I look at, okay, what's got adoption? So developers, users, activity. And then you start saying, okay, the best part of the adoption curve is early, but not too early when it's too risky. So really second cycle is the sweet spot for most of your capital. So that was Ethereum last cycle. And then it was Solana this cycle. And they were both the same. You get to the bear market lows, but there's massive activity, there's massive developers, the community is kind of unshakable. And so I look for those and then look for the chart, look for the relative outperformance on like a weekly chart, daily chart, monthly chart. Is there a chance that this is going to bottom versus Bitcoin? If not, I might as well just hold Bitcoin, do nothing, which is fine. And many people do that. So then I switched into ETH in September 2020. I started switching my ETH into Sol in 2022, and particularly in 2023 when it just started breaking out. And then I've been going further out the risk curve because there's always a first cycle group of tokens that do really well as well. Last time it was Solana, Avalanche, Luna, which didn't do very well in the end, and a bunch of others. And now we've got, it's not clear, but Sui's clearly in that, which I'm on the foundation of, so just a disclaimer. But it may be Celestia, maybe Monad when it ever comes out, it may be whatever it is, right? There's going to be a group of chosen ones, and those usually do incredibly well. Why? Because they're early in adoption. So I just try and do those asset allocation switches, and then I tend to then hold a smaller bag of, let's say, 10% of stupid shit, which I generally lose money in, which would be meme coins or FOMO and all of the stuff you have to deal with, right? Because you're always sitting here, even the banana zone. People don't realize the banana zone, everybody thinks that everything goes up together. It's not. 90% of the banana zone is you thinking, fuck, why don't I own that token? Why do I own this token? And you get FOMO and jealousy and greed. It's awful. But generally over time, they all ratchet up if you're in, decent stuff. But yeah, if everybody says this is a great project, it becomes a great project. It's kind of weird. But I've found that price, if I kind of impute the maths behind Metcalfe's law, price is actually pretty accurate. But if you think of narrative, if people say, oh, whiff is the next thing, you get a bunch of attention, which brings a bunch of active users. So that drives the value up. So it's always that balance between the two. I don't know what leads what, but there's this kind of flywheel effect. And once you've got a flywheel working, okay, that's a very big deal. We saw the flywheel of ETH last cycle. I mean, it just attracted so much capital because you could do so much on it. And we had two breakthroughs, which was three stablecoins, DeFi, and NFTs. I mean, you can't ask for more. Solana, its breakthrough has been meme coins. There will be a bunch of other use cases. I mean, it's just very nice and efficient and quick to use. So you need some of those breakthroughs as well, because what they do is capture attention, then more people build on them. The foundations all give out capital to spin this flywheel, more and more people build, and it works.
Raoul Pal had a distinguished career in macro investing. His experiences during the financial crises of 2008 and the European debt crisis shaped his understanding of systemic risks. These events also solidified his belief in the importance of decentralized systems like blockchain, which offer resilience against centralized failures. Pal's macro perspective informs his crypto strategy. He sees digital assets as an unparalleled opportunity for wealth creation, akin to owning a rapidly growing company like Amazon in its early days. However, he cautions against short-term trading, emphasizing that the real gains come from long-term holding of high-quality assets with strong growth trajectories.
That NFT cycle was what I noticed in this space. It loves testing early-stage ideas until destruction, right? It tests them, and NFTs were, okay, can we have digital ID? Can we use art on chain? Can we use smart contracts as a way of creating value, persistent value? Mm-hmm. So typical us lot, just speculate to fucking excess and test the infrastructure of this, and does it work? And what happened was, in the end, 99% of everything went to zero. But we stress tested the technology and we stress tested the idea, and out of this, my guess is stuff like punks will be at new all-time highs. Mm-hmm. The things that have survived will capture attention and then will have provable value. I've been collecting X copy art and Beeple and all of this kind of stuff. So I think there's a And then we'll use NFTs for other things. But we know they can do high velocity, massive transactions. And so we're doing the same with memes now. 99% of this space will go to zero. But out of this, we're proving what social tokens are. We're proving how blockchains can spin up an ICO in 10 seconds. We're proving all sorts of shit. And the amount of volume and velocity that goes on is stress testing the whole thing. It's bloody, it's a really clever way of using speculation to test technology. It's like incentivizing people to break everything. It's all about attention.
Exactly.
Right, we're tokenizing attention. And so it so happens that it's correlated because the more Trump does something, it could have been the other way. It could have been if he was more and more ridiculous, the token may have gone up. We don't know what drives the attention. But it's the tokenization of attention. And it's actually very hard to maintain attention over periods of time. So it's like a balloon in the air. You have to keep keeping it up, which is why most of them fall apart. Except it's been amazing that Doge has managed to capture attention since 2013. I mean, fuck how? But it becomes internet folklore and then it survives. So a lot of this is how long do you keep attention? Now, if you go back to the Taylor Swift idea, how long does she keep attention? Well, as long as she keeps releasing music and touring that's relevant. The moment she doesn't, unless you're full legacy band like the Rolling Stones, the attention disappears. So it's really interesting. Trading attention. I mean, who'd have thought this? If we'd have talked back 10 years ago and said, well, we're all going to be punting attention on like 3-minute charts. They're like, what are you talking about? Like, yeah, that's where we're going. The reality is the meme coin casino in the right part of the cycle has much better odds than the casino. I was in investment banking and hedge funds at Goldman Sachs, and then running a big hedge fund for GLG Partners doing macro. Macro is like when you invest in all assets based around how they move according to the economy. Right, the economy's strong, you buy certain things, it's weak, you sell things, stuff like that. Plus a lot of blow-ups and stuff like crises. That was our bread and butter. That's where we made all the money. I was lucky enough. I'd left the hedge fund and I started writing Global Macro Investor, my research service. I've been writing for 20 years now. And I was lucky enough to see a lot of what was about to happen for the financial crisis. And then I was living in Europe at the time, in Spain, and the European crisis came a few years later, where almost the governments of Europe blew up. And it was a big deal because at the time, banks were shutting down and taking people's money out. There was all sorts of bad things. Cyprus happened. And Cyprus, they basically took all money out of the banking system over 100 grand to confiscate it to pay for the losses in the bank. Having seen Lehman Brothers and all of that happen, and realizing that nobody in the financial system knew who owned what.
As Pal looks to the future, he foresees even greater challenges and opportunities. The rise of artificial intelligence, AI, and robotics will further disrupt traditional economic models. By 2030, these technologies could exacerbate inequalities and create new societal tensions. Pal urges investors to maximize their gains in the current cycle, positioning themselves for a more uncertain future. Blockchain, he argues, will remain central to this transformation, serving as the infrastructure layer for a digitally interconnected world. The ability to tokenize assets, attention, and even societal interactions will redefine how value is created and distributed.
Please like and subscribe my channel.